Okay, good morning, traders. Welcome to this live intraday strategy webinar. Today is Tuesday, January 25th. Michael Boutros with you on the horn. Good morning to everyone in the room, Rohan, Ted, Ziad, everyone. It has been quite an interesting start to the week. So the market sell-off has kind of taken front and center. If you look at all the news publications this morning, if we look at things on an even sort of structural keel, we actually haven't made a 10% correction in stocks just yet. Remember, that needs to materialize on a closed basis. So everyone who's calling for that 10% correction sort of standard haven't quite executed yet, does leave the risk for further losses, but let's take a look. So we got a full menu today. I want to leave as much time for your questions if you guys have any. We'll start off with DXY, as always, Euro, Kiwi, Dollar, Yen at support, Dollar, CAD at resistance, Aussie Dollar, Gold, SPX, and I do want to take just a quick look at what's going on in the oil markets there. Looks like we might be stalling towards the highs. Any other questions or trade setups, as always, feel free to throw them on the message board at any point. Here is what the dollar looked like as we were heading into the start of the week. This was the close of last week. We were looking at the DXY with this really strong rebound. I'll take you to the weekly charts before we get started. You know, this is where we are on whole. Remember, into the start of the year, two levels we were looking for possible support: 91.15, 91.46. We bottomed at 94.65. We bottomed at 94.62. Here's the rebound. Now, it's important to note that the yearly and monthly opening range high does take you right into this key resistance. That's the 2020 yearly open. That's the high close, high weekly close from 2021 into 96.50, 96.67. So from the larger prospect, we know exactly where we are in the DXY, right? Here's what it looks like on the daily chart. Now, again, here's your monthly open. There's the monthly range highs. Here's the spill down. Here's the recovery. Into the start of the week, the focus was 96. Are we going to beat 96 or not? That's the 618, the drop off of the December high. Longer term here, if we take a look at this from a slope standpoint, this is the pitchfork resistance, okay, right there as well. And we're looking for a reaction here today. Looks like we're getting a push higher. Here's what it looks like on the intraday chart. Okay, so there's that resistance level on 96 that we were looking at. If this breakout is legit and we do get follow through, the major region again is 96.50 into 96.60. That's your key resistance. Okay, again on the daily chart right here. So DXY is looking at major event risk heading into tomorrow. What are we looking at from the Fed? You know, there's been a lot of talk, especially over these last couple of days, on what the Fed will say or do tomorrow. You're looking at inflation near 30-year highs, okay? And you're looking at a broader risk market that is teetering, right? SPX, we're teeter all the major indices. So it's gonna be a balancing act tomorrow, guys, on how Powell comes out. Right? If it comes out with an increasingly hawkish tone because of the increased, concern we're seeing with rapid inflation, that may weigh on market sentiment. If he comes out with really not so much of a hawkish tone, well, we're under control, but we're still on pace for 2 to 3 hikes, you might see the market take some solace in that. It's going to be a very interesting rate decision from here on out, guys, every time, because the Fed is stuck between a rock and a hard place. Equity and risk assets do seem like they're teetering again. And then you have at the same time raging inflation. So they're behind the ball. I don't think, let me say this, either way, he's damned if he does, damned if he doesn't tomorrow. So it's going to be interesting to see the market dynamic. As it stands now, markets are expecting 3 to possibly 4 hikes. Again, you've seen various central, financial institutions, Jamie Dimon, I think you got Lloyd Blankfein was on yesterday also saying, 3 or 4 hikes, maybe 5. I think they're a little bit aggressive. We'll get the rebalancing tomorrow from Powell and see exactly kind of where on the scale we stand. But for the dollar, the rally has been pretty decent. And I start to look for the risk for exhaustion on the long side tomorrow. And that level, like I said, is 96.50. So if we go into the Fed tomorrow, we get a rip into this region, look for a reaction. If we break higher from here, here's a 240, by the way. Here's a give you a little bit wider of a view. If tomorrow we get a ripper into the Fed and we see a reaction here and exhaustion, it might be a decent fadeable event. Okay, all things held constant, we're constructive. So even if you do get a more meaningful pullback, it might be a buying opportunity. But on this stretch, it's really what kind of reaction we get into 96.50, 96.60 tomorrow. Okay, near-term support, just look at that channel. At the end of, at the end of the day, if we break back below the weekly open, which is right next to the yearly open, in my mind, that would be a near-term reversal pattern. Okay, so anything sub like 95.67. We actually opened the week in 95.63. All right, so sort of the outlook that we're looking for here on for the Fed tomorrow on the DXY. Any questions on this? Okay, so no surprise, looking at the euro, that's sitting right into a decent break of support. So let me zoom out here real quick. Here's what the euro looked like on our last update. This was published again back on this was yesterday, last night's update. Major support. We highlighted it. If we look at the previous update, guys, remember the daily and weekly charts will always be one update away. Click on that link, it'll take you right to where in that report specifically we're looking at. But here's the euro on the weekly chart. First, as it looked, this was back on the 20th. Okay, major support along the trend line, basic channel support. We came off of huge resistance, and that level was 14.60 to 14.45. Went over this yesterday in the webinar on Daily FX. Don't want to waste all your time going over that again, but beautiful reversal. Now testing uptrend support. Now remember, this is the weekly chart, so nothing really matters on this until we get the weekly close. That's first thing. Second, this is still the major range. So even in a breakdown scenario, 1222, that's going to be your breakdown zone. It's just below the low close from last year. So the weekly chart has a lot to look at as we head into the close of the week, but specifically eminently into tomorrow, here's what the daily chart looked like back last week. Again, we were highlighting that key support. Here's what the daily chart looks like now. Okay, boom. You got 3 days of rebound on that support before today. Looks like we're trying to make a break. Now, all things held constant, if we close below 1270s, that, my friends, would be an objective break of the monthly opening range low. Okay, not Mike Boutros' opinion, not Jamie Setley's opinion, fact. In that scenario, you're objectively looking for a late month low, and it's the 25th of the month. So if this break is legit, again, does leave really a lot of room on the downside. There's nothing until 1222. I've been telling you that for a couple of days. Here's what the report looked like again last night. Here's what the scalp looks like now. Here's 120 minute. All right, so weekly open, held resistance, didn't even get a test last night. Here's the dump, here's the break. If this is legit, any recoveries should be held at 113 intraday today. Again, the next downside level, there's nothing until 1222. Okay, you got a couple of swing lows here, but these are just basically the lows that we're trying to test right now. One extension you may consider, although I do think it's not really like the best warranted move here, but let's just, for argument's sake, take this extension, okay? Even that, 2 equal legs off the high would get you down into 1170s. So either way, okay, looking for rallies to be capped by 113 if this break is legit, key support down at 1222. If we open up the US trade session, guys, and we rally back above 113, that's not necessarily bullish, but that would put to bed at least the immediate bearish bias. Okay, don't forget, heading into tomorrow, later tonight, even midday today in US trade, as Europe closes, you're likely to see things start to fall into that holding pattern before the Fed. Okay, so I rarely trust like major market stretches right ahead of central bank rate decisions. So do keep that in mind on some of these moves. Any questions on euro? All right. Hey, good morning, Iman. Great to see you in the room. So that is euro. Number 3, I do want to take a quick look at Kiwi. What am I talking about? New Zealand dollar. Here was the update from last night on Kiwi. Another one where it looked like it was testing a pretty decent support target. That was the 100% extension. We're trading below that again. But just to take you from the top down here on Kiwi, remember on the weekly charts, there's more to be desired. You know what I mean? It's a big range and it looks like we're breaking support. So we need to see a weekly close below 67. Remember, that's last year's low. That's a 38.2 of the entire 2020 rally. And it does look like a decent break, right? My only issue is trend support. Trend line resistance, channel support 1 touch, 2 touch confirms. If you want to call that a 3rd touch, right? That's just lower. So I don't want to get faked out here. You know what I mean? All things held constant, looking at this from the weekly chart, I say, hey, that's a break. Let's look for 65.60. But I don't like that that slope is there. So if we get an accelerated push, I do think 65.60, 65.59 is, not outside the realm of possibility. Here's what it looks like on the daily chart. A break, an objective clean, this was last week, break of the monthly opening range does have us looking for a late month low. Okay. It's the 25th. Here's that slope I was talking about, just a little bit lower. So this is my reasoning for I can't chase Kiwi lower. If you're holding shorts, it's worth it to kind of leave a little on the table and bring your stops to break even, I think, to see if you can get that stretch down towards 66.40s, 66.50s, where the slope is. And I want to see a larger reaction here. Okay, here's what it looks like on the intraday chart. Again, slipping below that 100% extension. Even on the near-term approach, just the high-low high gives you the lower parallel. Again, just a little bit lower, 66.30s here. So all things held constant, guys, I'm not going to jump on anything with Kiwi dollar here. It is a clean weekly opening range low. Here's your weekly open. You set a high. You haven't tested the high, but here's the low, and here's the secondary test of that low. So look for an objective break here. Lower, you're looking for the lower parallel in the 66.30s. Near term bearish invalidation is at 67.33. If we make it back below those lows from January, from the opening range, we make it through the median line, I think at that point, you start to look for a larger recovery. All right, so a little bit more of a wait and see approach here on Kiwi. If you're holding shorts, start to clean it up a little bit. If you're not holding anything, look for a reaction and a pivot here. Rallies should be capped by 67 if this is moving lower. All right, that is New Zealand dollar. Number 4, Smarchin says, hey, Michael, can you take a look at Swissy and Kiwi Swiss and Oz Swiss? As always, unusual pairs, but I can't be with you today, so I'll see the recording. Thanks, I'll see you on Thursday. Cheers, Marchin. Yeah, I'll give you an update towards the end of the session here for sure. All right. Dollar yen, an important pair to watch, especially during major US market announcements, and we get into the rates decision tomorrow. Here's dollar yen from the weekly perspective. Nothing to write home about here. You all know that we essentially nailed the high right into the start of the year. That 116 tip right on January, into the start of January, was the median line. That was the August 2015 swing low, a level that we were watching. Failure there, and it's been the exhaustive pullback ever since. Now we're sort of bottoming out. We're back below 15, which was a big major pivot in price. We're not quite at uptrend support. What do you do? I think this one's going to be a really, excuse me, strong one to watch tomorrow on that release. Here's what it looks like on the daily chart. Not much of a monthly opening range, but it broke to the downside right here on the 13th. Here's a 618 of the rally off the December low. It's actually the November low. But what do I want to say here? We're below the 25% parallel. All things held constant, the ideal scenario would be for sort of a catch of support, either at 113.15 or on a deeper drawdown, 112.50. One of these two levels is where I'd like to see a more prominent reaction, a larger rebound, but we haven't gotten it yet. Here's the intraday. For me, I'm just looking at a break of this range right here. 1357 is that 1618, caught the lows here, caught the lows into the start of the week. The 38.2, the drop gives you 1450, looking for a move. If we buckle below 1350, there's nothing till 1315, 112. It's a long way down. That's a break of uptrend support. If we rally towards 114, this is where I'd be looking for more of a reaction, more of an inflection point in price. SPX is on the list, and NASDAQ, Rohan, it is now. NDX, I got you, brother. So for dollar yen, it's a wait and see. It's sitting at uptrend support. That's all I want to say. That's all I want to say. See if we can't get a reaction, a directional break here in dollar yen. Any questions on the abomination? Crude, gold, and silver, please, Ty. Crude's on the list. Gold's on the list. Silver, we'll add that one. And the 10-year. Sure. So let's talk about the 10-year now. We're talking about dollar yen, very yield sensitive pair. Here's what the 10-year looks like. Okay. We turned just pips ahead of the 100% extension. That was 191. The high registered at 190 flat. Okay, 190 proper. And here's the pullback. Look, I do think, even if you look at this from a wave count structure, that looks like a clear 5-wave advance. So in my head, Ty, I'm looking for a corrective 3-wave decline. So let's say this. I'm gonna look at a couple of things. Bear with me one sec. Okay, so off the July lows of last year, the 38.2 gives you 160. That's kind of a steep drop. If we take into account just this year's or the December rally at 38.2 gives you the same zone that we were looking at, 169, 170. So here, and here, 155. Both areas of which I'd be looking for a low in price, okay, before resumptive of the uptrend. Ideal scenario, you get like a 1, 2, 3, and then resumption. But the point being is I look for a deeper correction than that before we start to move higher in yields. And that kind of makes sense with where we are in price. So a lot of this is going to be completely determined, Ty, on what happens tomorrow. This is the nature of central bank interest rate decisions. It is a messy type of endeavor, but those are the two levels I would be looking at tomorrow. Make sense? Okay. He says yes, right on, Ty. Okay, so that's the 10-year for you. Just a quick update. And again, we'll be watching this one very closely with how dollar yen also responds. So see if we can't find some basing in both of those. All right, let's jump back into the FX block. I'll clear those out, and then I'll get you into some of the commodities and equity indices that we've been looking at. First up is dollar CAD. I'll be putting out a piece on this on Daily FX later today. We're at resistance. We're at resistance. We are at resistance. Very clear-cut move. I loved the rally. We've been talking about dollar CAD on the long side for weeks, or since last week, I should say. I'm out here, but looking for re-entry. So again, weekly charts, the first levels that we were talking about for dollar CAD was right here at the 52-week moving average. Okay, that was like 25.20s, and down at the 786 retracement basic uptrend support, and that was like 124.30s or so. We bottomed just pips ahead of that. Here's the recovery. So from the weekly chart, we responded to a very nice area of support, loved the move. Here's the daily chart. Okay, here's our last update on dollar CAD. Here is the daily chart. We are just making a rebound off of confluent Fibonacci support, a 100 off the high, a 786 off the low, uptrend support. We sat there for days and days and days looking for a near-term breakout to give us the long side bias. We got it. Major resistance, or the first level of major resistance, 2640 into 2646. We tested that yesterday and closed right below. This is resistance. Okay, for all intents and purposes, this is resistance on dollar CAD. So you look for inflection off this region, a topside breach, the 2021 open, this year's high day close gives you 27.24, getting to 27.13, this region right here, that's your breakout zone. Okay, beyond that, 27.67, and again, the yearly range highs comes in right around 28. It all is determined on this level, guys. This is not only this year's objective yearly open at 2640, but again, it's a 38.2 of the decline. Basic slope resistance off of last year's high, 1, 2, 3, and the uptrend, 25% parallel. All of it is right here. Looking for inflection on dollar CAD. Here's what it looks like on the intraday. And this is exactly what you want to see, to have validation, to have conviction in your levels. We ran into it. You can see that even the upslope caught that spike like no one's business. Here's the pullback, and here's us struggling to really clear that 2650 level. Look, at the end of the day, here's what it looked like last night, by the way. Or this was back on the 23rd, excuse me, right into the open of the week. So we rallied into this region, and we're just sitting here. The only thing I've added onto this chart is a retracement for that rally off of last week's low. Gives you a 38.2 at 126. Weekly opens 25.70s. Bullish inval is down here at 25.40. Don't expect us to get there, but that's the level that if we break, hey, we got to look lower. We got to look lower. Okay. Can I have the 2 hour again? Ty, you're talking about dollar CAD right here. Okay. Again, there's no change to any of the levels from the report. The only thing is just that new retracement after that spike high yesterday. But we are at resistance. So if we buckle, it's 27.13. It's this zone that needs to validate the breakout. Okay. This is the same formation, guys, just for, here's a 240. If you want the 4 hour there, Ty. I just want to show you, we were working with this. Okay. All I did yesterday was kind of adjust the slope to that basic gradient off the high. Gives a little bit better of a play, continues to validate, hey, this is big resistance. All right, that is dollar CAD. Now, is it the same type of clarity that we see across the com block? Pretty much, okay? Aussie dollar at support. That breakdown was a beautiful breakdown, has already stretched into its major fib confluence. You know, this one's my favorite. 618 off the low, 100 off the high. That's the pivot point I'm looking at, 71.15, 71.30. This is what we're all focused on here. If we pivot back below again today, you're looking for the resumptive move towards 70.60 and towards 70. This might be a little bit more of a type of bounce type of play though. So I'm kind of looking to see how this reacts here today. Here's a 2 hour. All right, let me take a step back. Aussie on the daily charts, or even, you know, Aussie on the weekly charts doesn't really tell you much. You're still in the range. Here's the 618 of this near-term rally at 71.15. We're sitting on that as support right now. So there's really not much to write about here. Key support, is into the 70 handle, and the yearly open is not at 72.70. I'm not sure why that's there. Oh, this moved. I'm sorry. That is the yearly open. All right. So there's not much to write about home here, but the daily chart, right? This is challenging a break of the monthly opening range low. So whenever things get kind of murky, we try to get back as objective as possible to price action. That is our discipline. Here's your yearly open. Here's your yearly opening range or monthly opening range. If this break is legit, we want to see a close below 71.20. Intraday, we bounced on a close basis. Haven't quite done it yet. If we close at these levels, it would be a break below the weekly opening range, the monthly opening range, but we haven't done it yet. So we're sitting at support, okay? If the uptrend is broken and we have 3 touches of that slope before the break last week, this is your first area of inflection, and it's exactly what we're seeing. 71.15, 71.30 is key support on Aussie, looking for a reaction off this level. A favored move, in my opinion, guys, if we get dollar strength tomorrow. Why? We've already made the break, okay? If you get dollar strength, you're looking for 70.60, you're looking for 70.16. You've already made the break of the uptrend, okay? In the event of dollar weakness, look, bearish invalidation on this is all the way up here at 72.30s. So just know that. If we get a rally in this tomorrow, if the dollar breaks down, even if we break the weekly range high, that's still sort of your bearish inval. Okay, you need to clear 72.28 on a closed basis to shift the focus higher in Aussie. So the levels are well defined. Okay, we're just looking for the catalyst to sort of break out of this near-term range for Aussie. Any questions there? All right. A quick thing I forgot to tell you guys, as far as dollar CAD is concerned, tomorrow we do also have the Bank of Canada. It's actually not going to be like a, run of the mill. There's actually a lot of focus on the Bank of Canada. They've tried to increase their hawkish tone. Are they going to come out more hawkish than the Fed? Yeah, we'll have to see how that turns out. But that comes at 10 o'clock Eastern, okay? Where the Fed writes decisions at 2. So for dollar CAD, you're getting it from both sides tomorrow. Just make sure you keep that in mind. Okay, that is number 6 and 7. Number 8, here's gold. So the rally kind of faltered, okay? And we're sitting in this kind of boring range since the start of the week, but the broader levels, I think, are super, super clear here, okay? Let's take it back to the weekly chart real quick. Gold made a break to the upside last week. That break was 1830. We've been talking about that since the start of the year. It's also where we opened the year into 618 from the drop off the high we made in November. So we've been looking at this area between the 52-week moving average and that 618 since we started the year. Last week broke higher and closed. Now the basic trend line off of last year's high is still there. So if this yearly consolidation is still in play, that's still going to be a level to beat. You can drop this at this point. Let's just go ahead and drop that slope. Nope. This. This is the slope I'm talking about. Okay, so we're not quite on breakout mode yet. Iman says, my beloved gold. Yes, it's been very clean. So we're testing, again, yearly trendline resistance. A weekly close above this slope is needed to validate the breakout. So I'm not bearish, we're bullish, but we're at resistance. So what does that mean for us? Well, for the near term, here's the daily chart. Again, objectively, if I take a seat back and I just look at price action, this is your monthly open. You set a low, you test the highs, you break the highs. That's a break of the monthly opening range. You look for a late month high. Now, levels on the upside that we were looking for. 1849, which we missed last Thursday just by a hair. I think the high registered at 1847, 1847.97. I mean, give me a break. $1 off. But nonetheless, the pullback found support exactly where you would want. Former resistance, the opening range highs for the month, the 618 of the drop from November, the yearly open. I mean, I could keep going. And it continues to focus on this range, guys, 1830, 1850. Look, it's a bullish trend. It broke out. I'm still looking higher. 1850, that's the breakout zone. Bigger, 1861. Okay. Yesterday, I told you guys bullish invalidation at 1823. I'm still kind of holding that assumptive level. Okay, that's a 38.2 of the advance off the lows that you made for the year. So it's essentially the yearly retracement. And it's alongside this basic embedded channel. Okay, so even if this breaks down into this region, I wouldn't want to necessarily call it, you know, a reversal yet. It's really 1823 that would need to sort of change my bias. That being said, the weekly opening range is preserved. Heading into the interest rate decision tomorrow, look for that break. If the weekly range breaks to the downside, 1807 is your last ditch effort. If it breaks to the upside, we're looking for 1861. Above that, it's 1877. Ultimately, it's still a bullish trend, but we're coming off of uptrend resistance. The biggest threat is for a pullback to uptrend support. All right. Any questions on gold? Patience is required here a little bit. Okay. You can ditch this extension at this point, I think. And yeah, I mean, even if it breaks lower, here's silver, okay? But even if it breaks lower, I don't think there's much room on the downside. I don't think there's much room on the downside. Silver, Ty, for you, looks like this. It's not something I'm necessarily actively trading in, but I do like the reversal. I just wish it was at a better level. We had the high day close here marked at 2480. 2493 was the low week close from way back here, March, April of last year. And the slope is there. Didn't quite get a tag. So not the cleanest, but what I would tell you on this one, Ty, is near-term support. Near-term support. Here's your yearly open. I actually wouldn't want that to break if it's heading higher on this stretch. Right there, 2328 to 2345. That's got to hold near term. Or ideally, this holds near term if we are heading higher. Let me see what the 2-hour chart looks like. So this pitchfork I drew for you, I believe, in the webinar last week, right? It's an objective pitchfork off the low, high, low. Median line resistance was a perfect tag on that pullback. Here's the pivot back below the median line. That's the retracement off the lows. Oops, sorry about that. That's what I'd be looking at. That range extends down here. And forget the 50, 38.2 breaks. Or if that yearly open breaks, you're probably gonna see that thing tank. But that's what I'd be looking at, Ty. That's kind of your support. That's kind of your support right there. You wanna see that hold. You got the range highs for the year. So your yearly opening range high and the monthly opening range highs right there anyway. Really beautiful that it sits on uptrend support. I'd be looking for an exhaustion low ahead of this region. Make sense? Can I have the side by side? Yeah, you got it. Here it comes. So this is a different pitchfork, right? This is the broader view. Just on the advance, this is using just these thresholds right here. I think it's a better descriptive price action for what we're seeing in the near term. All right, so that's gold and silver. Interesting setups for sure. That's 8 and 9 there. So SPX, everyone's looking at this into the open. It was a very interesting open. Actually, if you've been watching the futures markets, we kind of rallied, or we were at least break even here, but then we've started to slide again. Man, I don't know what to show you with this. I've showed these charts over the last couple of days to a lot of people. I think it's been very descriptive for where we are in price. And it's very telling. Here's the weekly charts, guys. We haven't touched this, if you guys remember, literally for the last couple of weeks. 236, a basic 236 of the advance off the 2019 low is 41.97, so 4,200. Okay, we just missed that yesterday. Just missed that. This is the weekly chart. So the focus will be on whether we close the week above or below the 52-week moving average, your yearly moving average. You can see it's been a very strong pivot in price. Typically, when we close below that, there's a deeper sell-off in price, a deeper sell-off in price. Typically, when we close above that, it's the resumptive of the uptrend. It's the resumption of the uptrend. This is important here today, this week. Okay, so if weekly we've broken uptrend support, right? Here's what it looks like on the daily chart. Same slope from last year, big break. Here's the tumble. Do you remember what we talked about in the webinar yesterday? I told you guys about the sleeper cell support, 43.34, a retracement that not many people give merit to. It's the 88.6 retracement, right? Guys, we closed well above that. Look where it's support right now. That's still 43.34. Can't get my head around the late recovery yesterday. Does it erase the technical damage? No. Great question, Rohan. Great question. It doesn't replace, what's the word? It doesn't, erase the technical damage. But Rohan, if we had closed below 43.34 yesterday, if we closed below that today, you risk another accelerated sell-off. Okay, it's even more technical damage. All things held constant, Rohan, we're rebounding off of downtrend support. The technical damage is done. The technical damage was here. You can't refute that. We called it right on. As soon as we got the daily close below that slope, we called it. That's technically not damaging, damning. Okay, technically damning for the SPX. Why? Because we haven't gotten a significant break of uptrend support in years. So that's when things started to turn ugly, and that's when we recognized it. Now, once that happens, you give merit or you give description to the downtrend. That's what this pitchfork is. And the sell-off, however dramatic it looked, and however it looked like a panic sell-off, the fact that we closed above downtrend support suggests that it's still a rather orderly decline within the downtrend, right? If we were to break below this, I think that's where I think you get panic sell-off. That's when things get really, really, oh my goodness, and yields will start to move higher, gold will move higher, dollar will move higher, and you really start to see the risk off, quote unquote, I'm doing air quotes, really start to materialize. Didn't really get that. Now, that's not to say it's not going to happen, Rohan, but all things held constant, that's been my line in the sand. We haven't closed below downtrend support. Remember, that's when things get the nastiest, right? If you close below downtrend support, that's when you tend to see the sharpest part of the decline. When you breach uptrend resistance, that's when you tend to see the sharpest part of the rally. So things we're paying attention to. Now, this is the daily chart. We've been using it as sort of just a static guide. I guess some respect for the downtrend support. Let's see how we go today. Thanks. Hey, you're more than welcome, Rohan, but good question. Here's what it looks like on the intraday chart, man. Okay. So I'm, just at disbelief on how accurate this pitchfork has been. We drew this pitchfork into the start of the year. It's a basic high, low, high. Look at how accurate this slope has been. Okay. Here was the break of the uptrend that we were talking about. Immediately, we tried to test that as resistance. That was also the 75% parallel pullback. Again, 75% parallel resistance. Breakdown. You'd expect to see a break of the median line accelerate. Here's the break of the median line accelerating. Testing the median line as resistance. Move lower. 25% parallel. Slight bump. Break of the 25% parallel. Key support. Key support. So yeah, intraday, we did dribble below the lower parallel, but we closed well above. I do think this is where the 88.6 is, by the way. I don't have it on the chart here, but I guess let me just add it for you. Nope. That's this, right? So all things held constant, again, you rebounded off of downtrend support. So, guys, on a move like this, you're going to get a hangover. You're going to get the market hangover. You're going to get, side by side. Ty, I was going to say you're going to get some sideways action. You're going to get some chop. Levels to know is either a break above 44.50. Okay, that's going to be your sort of reversal trade. Or if we close below 43.34 again, this spot right here, I do think you risk, further washout. Now, are we going to get a move like that right ahead of the Fed? Personally, I don't think so. You might get guys who are wanting to unload right ahead of the Fed because they foresee a super hawkish Fed. I don't think we're going to get that. And I do think that some equity markets find some solace here. The decline's not done, but again, we're coming off of downtrend support. Could we see a rally towards downtrend resistance? Sure. That could take you all the way up into the 45.50s, 44.50s, 44.60s. So good time to kind of, set your levels, take a deep breath. You're going to get some recovery. You're going to get some pullback after a move like this. There's a lot of technical jargon that happens. At the end of the day, we're rebounding off downtrend support. Look for resistance at downtrend resistance. NDX made a very similar move in that drop off, okay, threatened a major disaster. I don't have an intraday setup for NDX. I don't think so. Oh, I do. Hey, look at that. But here's the daily chart, Ty. Okay, basic high, low, high. We gapped into the lower parallel. Here's where we opened yesterday and then rallied. Obviously, intraday we dropped, but rallied. On a closed basis, doesn't even look like we touched it. Doesn't even look like we touched it. Now, again, here, one thing I do want to note is if we take a side-by-side comparison, right? Here are the lows from October, not quite tested yet. Here's NDX, lows from October. We're there. In fact, we closed below it yesterday. So is that a non-confirmation low? Remember, we always like to look at these. A lot of times they're very indicative of inflection points. And when you have non-confirmation lows in related assets. So NDX made a new low and closed below the October low. The SPX did not. Again, it's something to take note of. It's something I'll put in the column of, okay, risk for reversal here. It's not a justification, but it's something that we're taking note of. So for NDX, it's a very similar trade in that, Ty, it's rebounding off of downtrend support. Now, if we look at this on the intraday chart, let me clean this up a little bit. That's the 38.2 which broke. 618 held the low. Just want to check out a few things here. What does this extension look like? Okay, no good. And the retracement. There's your resistance. Okay. If NDX is heading lower, rally should be kept by 14,886. Okay. It's actually a decent pivot in price if you look to the left there. A downside break from here, there's nothing till 13,183. All right, so there's plenty of risk. The levels are well defined. The question is, how large of a rebound do we get off of downtrend support on these trades? And that's sort of what I'm focused on right now. Questions? Does that make sense, Ty? Here's your side by side. He says yes. All right, cool. Okay, that's everything from my end. Let me get to your questions here. First on oil, got about 15 minutes left. Let's jump real quick. Here's oil. It's the same setup. I don't really have anything new to say about this, guys. On the webinar yesterday, I told you what I thought, and that's kind of still what I think. The risk is exhaustion. No one's debating the uptrend. I came into the year telling you that we're wildly bullish on energy prices, generally speaking, nat gas, crude oil, the works, the geopolitical environment, just the domestic output and the restrictions that have been put on drilling on government properties and all of the whole picture is bullish, in my humble opinion, for oil. The issue is where we ran into. 85.61 is going to be that low from the 2013 yearly low, I believe. Yeah, was the yearly low. Caught the high in the rally back here, back in October. Here's last week. We pushed through it intra-week, but couldn't close above. Couldn't close above. Near-term exhaustion. That's been the name of the game. That's what I've been saying since the start of the week. That's kind of what I'm thinking still. Constructive all above the median line. So even if you pull back 80, 79 and change, you're still constructive. On a breach, 90.68 is the upside target from here. But weekly, it's looking tired. Weekly, it's looking tired. Divergence on the weekly chart. Not things I want to look to reestablish a new long from here, right? Here's what it looks like on the daily chart. Daily chart showing a little bit bigger, okay, of a corrective move already off the highs that we made last week. Here's the pullback. A basic, I mean, did we get a 236? I think we got a basic 236 already. Yeah, we got that. A basic 236 is 81.80. A 38 is 78, which is below the median line. So near-term support, I'd want to see that hold if we're heading higher on this stretch. Bullish invalidation, I'd still keep it down here at 77.20, basically a 77 handle. The 2012 low, the 2018 high, major pivot in price, right? Basic trendline support. That's your bullish inval. So support, areas of interest for possible entries for the resumptive move. Breakout, and you're looking for that 90.68 level. Here's the intraday chart. Again, getting real granular here. If this is just a simple corrective move, 2 equal legs would give you 80.93. Look for a reaction there if you get it on the pullback in crude. Questions on oil? Okay, getting into your questions here. Dollar Swiss for March, and here's what dollar Swiss looks like. It's a breakout of a near-term trend, but haven't really been tracking this one closely. Dollar Swiss is one of those trades where you have a monthly opening range and you're right in the middle of the monthly opening range. I don't like this trade. You guys know I'm not really a big fan of it. generally speaking. I mean, if you feel compelled to trade dollar Swiss, I don't see what the point is. Why don't you just trade euro dollar? But at the end of the day, I don't like the technical stance, and this is why I'm not going to focus on this one. But here's your yearly open. Again, yearly open support, 91.16, 618 extension of decline, 91.10. That's still the lows for the month. You know, resistance at the median line, not near 92.30s. Breakout, you need 92.70s to get the breakout to the upside. So what do you do in the meantime? You know, you look for technical structure on the near-term chart. See if we can find it here. Got to clean this up a little bit. Let me just see what this looks like real quick. Okay, we're at a big spot. My favorite fib confluences, I'll bring it to your attention once again. 618 off the high, 100 off the low, 92 into 91.95. Huge region of resistance right here. We're testing it today. Watch that. If we pivot back above that, even if you rally to 92.60, guess what? That's still within the confines of the monthly opening range. That's my problem here. It's not like at a major breakout on the upside or downside. You're sitting mid-range. Now that mid-range is actually a technical level of significance. So keep in mind. And the last thing I would just test is just a retracement off the lows. Okay, that's actually decent. Near-term support, bullish inval, resistance, 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 breakout target. All right. So Marcin, hope you're watching this on the recording. This one's for you. A quick look at dollar Swiss. The other crosses you want to look at, Kiwi Swiss and Aussie Swiss. I don't think I'll have time to go through all of these, but a quick look at Kiwi Swiss. I don't even have a chart of that. It looks like it's in a bearish trend, but the momentum looks waning. The whole thing looks waning. You know what I mean? It's at downtrend support. Momentum is already sort of flatlining into oversold territory. I'd be very cautious on trying to chase this one. Might be a decent rebound. Woo-wee! 100 off the high. Pay attention. Pay attention. Now, I don't know that this is a low. This is a very aggressive retracement, guys. I'm just putting it for argument's sake. If this low were to hold, because this is, again, identified support right now, that's your bearish inval near term, this thing right here. All right. So some levels for consideration here. I have you at support. I have you at support. Here's your weekly open. I'm sorry, this the yearly open. Yearly open resistance. That's resistance here. Okay, break lower from here. The 60 handle might be a level. I'd be looking more of those swing lows more towards that lower parallel, but 58.60 would be the downside sort of objective if that breaks. But you're at big support here. If this is corrective, that needs to hold. All right, that's Kiwi Swiss. What was the other one? Aussie Swiss. Man, you really pick them out, don't you? Let's take a look here. All right, not the cleanest. Ugly. This is just a super tight range off the low from December. You already made a 618 of the advance. Who's the biggest loser, Aussie or Swissy here? Okay. Just want to see where basic 38 too. It's okay. It's right there. All right. Look, I like this slope. I would be watching, the monthly opening range high is going to dictate here, obviously resistance right into that trend line, but that's your breakout zone. The targeted sort of reversal pattern would have to be 67.50, a breach above this. 100 off the high, 100 off the low, 38 off the high. For me, that's sort of the breakout zone, near-term resistance, a move lower from here. Yeah, you probably already probed the 618. Yeah. That's the daily chart for Aussie Swiss, Marchin, for your consideration. Your monthly opening range, again, here's your yearly open, is set just above Fibonacci support, just below downtrend resistance. That's sort of the focus range here. If this breaks, things could get really ugly, so watch out. Okay, quick look at Aussie Swiss as well, an interesting pair. I think that was the last one that you needed. Take a look at. Rohan Nikkei, what's your ticker for that? Let's see what I have. JPN, that's what I usually use. I think so. Japan T25. Yeah, I think this is the one I used to also use, the CFD. All right. Okay. Well, it's not the cleanest setup, and it does look like it's trading on a heavy foot. Look, you're already testing the lows from like multi-month lows from the August move here. I personally, okay, would be looking for a drawdown near 26,128. Just my humble opinion. I'm looking at this for the first time, Rohan. Just the nature of the decline kind of looks kind of weak, but it's been a straight shot since the beginning of the year. So what are you going to do? Jump on a short further and try to press this lower from here? Doesn't look like the technical clarity is there. If we take things just sort of as objective as we can, you're testing the bottom end of a range, of a multi-month range. Here's your 2021 yearly open. Okay, so essentially you've gone sideways for a year. You're now testing the bottom of that full year zone. If it breaks lower, that's kind of a shadow support. I don't think a lot of people will be looking at. You might want to pay attention to. But until you close below, man, this is it's I can't tell you with conviction, try to short that. So this is your January low from last year. You tested it back in August. You tested it again in October. You're there now. It's big support. Big support. All right. Okay, I'm way over on time as usual, but I think I got to everyone's question. So best of luck trading into the Fed tomorrow, guys. Listen, there's going to be a lot of talk, there's going to be a lot of volatility. Everyone's got their own opinion about whether the Fed should hike, whether they should not, more aggressive, less dovish. Flush out the nonsense. Watch price. As it stands, the dollar is testing a break of resistance. It's testing a break of the monthly range highs. You need to clear above 96.50 to get the breakout. So don't get faked from intraday price action. Let the market settle tomorrow. Specific trades I'm looking at still, dollar CAD, beautiful resistance level. We're looking for a reaction right here. This might be a decent pullback trade if the dollar does come off tomorrow, but certainly that's already at resistance. All right, so I'll go ahead and wrap it up here. Rohan says, thanks, makes sense. Thank you, Michael, for the amazing webinar and setups. Appreciate you guys, Ty, Ted, Steve, Rohan, Eman, Aurelian. I'm not gonna get through all the names, but all of you, thank you so much. Best of luck trading, and I will see you right here back on SB Trade Desk on Thursday morning. We'll cover the aftermath of what happens tomorrow. Cheers.